The U.S. economy is grappling with the third wave of COVID-19, which has already claimed more than 230,000 lives and slammed the brakes on economic growth. Advanced Q3 GDP numbers show an economy recovering from Q2's sharp fall, but Q3's 33.1% jump still leaves the economy 3.5% below where it was at the end of last year before the virus struck. And unemployment remains well above pre-COVID levels at 7.9%.
After a very strong performance in the third quarter, we expect GDP growth to really be quite modest in the fourth quarter. We have our recovery tracker that points to a moderation in economic activity, and we know that the health situation is deteriorating at the same time. The combination of the two don't really bode well for the U.S. economy.
Amid this backdrop, it is crucial for a second short-term relief package after the first one expired end of July.
The two parties have diverging views as to not only the scope and the magnitude of the fiscal relief program, but also who should get the funds. That's the first question, and that's what's most imminently necessary for the U.S. economy. The fiscal relief package would have a hugely beneficial effect to the U.S. economy. We know that the CARES Act, which was worth around $3 trillion, really started the recovery in mid-April.
That package had been stuck in political bickering ahead of the elections. Now that a Democratic blue wave has failed to materialize, experts say the prospects for large-scale fiscal spending are dimming.
The most likely outcome is that we just don't get any stimulus now. What we're going to see going forward is that there'll be a real sort of gridlock in terms of getting anything done now.
But there is still some hope that some sort of stimulus package will be agreed upon by both parties before year's end. Both the Senate and the House are due to sit in November. They have to agree on a stopgap funding bill to avoid a government shutdown on December 11th. The aid package might thus be passed at the same time.
There will be some sort of stimulus package during the lame duck session. Before the new senators come in, before new congressmen come in, before the new president comes in, it's an opportunity sometimes to pass difficult legislation. Both sides now, with the elections over, just want to get it done. I think they see with the spike in COVID and the effect that will have on the economy, both sides are going to say, okay, let's just get the stimulus going.
Fiscal stimulus would provide the impetus for the U.S. economy to enter 2021 on a stronger footing. But the longer-term fiscal picture remains challenging with a split Congress.
When we look at 2021 with a new president-elect, then we have the questions of whether they would be able to implement their new fiscal agenda past the short-term fiscal relief program. And that is more of a question of negotiations between the newly elected president and the newly elected Senate. And that's an environment in which we think there's likely to be more political gridlock in the wake of these elections.
The inability to implement stimulus measures will present more headwinds for the U.S. economy. But it is not expected to derail the current economic recovery.
I think adds risk. If in fact this wave gets worse over the winter months, more companies have to shut down, and I think it's probably unnecessarily jeopardizing the recovery. But I wouldn't go so far as to say that it undermines it completely. I still have a base case that I would expect things to continue to recover over the next couple of quarters. For fronts for the treatments and the vaccines, once the treatments get a bit better, the vaccines rolled out, I think the economy can start to get more back to normal. And I think even by sort of the third or fourth quarter of 2021, you may see overall economic activity sort of rebounded to the pre-crisis levels.
In the markets, investors are bracing for more volatility ahead. 2020's elections brought back memories of 2000, where the presidential elections between Democrat Al Gore and Republican George W. Bush was also too close to call, resulting in recounts in Florida. The winner was only declared in mid-December, by which time the S&P 500 index had tumbled more than 8%.
if you take a look at what happened in 2000, we did see a big period of uncertainty. There was a lot of stock market jitters, and we did see some weakness persist. A stronger dollar, treasuries were in demand, and I think that will probably play out unless we have some swifter action by central banks. So I think it's going to be a very choppy road. There's still a lot of reasons to be optimistic for 2021.
In terms of sectors, laggard value stocks and clean energy stocks are fading out with the blue wave. In contrast, tech is seen as one of the biggest winners of a Republican-controlled Senate.
I think it's back to the same old, growth stocks and the mega tech companies, and any type of risk that they might have had from sort of increased regulations or even antitrust type legislation. I think that's decreased. So I think it's back to the growth story.
Investors are going to continue to go into tech. Antitrust hearings, I think you're going to see that now that you have a Republican Senate in place. I think there's going to be a little bit more of a relief for the Amazons, the Apples, and Alphabet, and I think there's a lot more upside here for tech, even despite their high valuations. Like the corporate tax hikes, that was something that was really weighing on the tech outlook, and now that we're not going to get that, I think that's going to really spearhead a lot of investors.
Market watchers also see opportunities in Asian equities.
If in fact Biden wins this, then in fact I think there's a good Asia story. Biden isn't necessarily going to sort of really reverse course on the direction of policy. I still think he'll look for policies that try to protect American workers and so forth. But I would expect him to do it in a much more sort of professional, diplomatic manner that I think will be healthier for market dynamics, particularly in Asia.
The election outcome will only determine market direction in the short term. Longer term, the trajectory of U.S. equities will still be driven by the overall economic recovery from the pandemic and the U.S. Federal Reserve's accommodative monetary policy.